Starbucks. The name alone conjures images of steaming lattes, cozy cafes, and the comforting aroma of freshly brewed coffee. From a single store in Seattle's Pike Place Market in 1971, Starbucks has become a global behemoth, with over 34,000 stores in 80 countries. Starbucks' success story is one of ambition, innovation, and a relentless focus on the customer experience. The company transformed the way we consume coffee, turning a simple beverage into an affordable luxury and a cultural phenomenon. For decades, Starbucks has been synonymous with quality, consistency, and a sense of community. Its comfortable and inviting stores have become a third place between home and work, where people can relax, socialize, or get some work done. The company's commitment to ethical sourcing and social responsibility has also earned it a loyal following among conscious consumers. However, even the most iconic brands face challenges, and Starbucks is no exception. In recent years, Starbucks' seemingly unstoppable growth has shown signs of slowing down. The company's stock price, once a Wall Street darling, has experienced a noticeable decline. This dip in share price reflects growing concerns among investors about Starbucks' ability to maintain its growth trajectory in an increasingly competitive market. While Starbucks still commands a significant market share and enjoys strong brand recognition, several factors have contributed to the recent performance dip. These factors include changing consumer preferences, increased competition from both established players and new entrants, and operational challenges. To understand the full scope of these challenges, we need to delve deeper into the evolving dynamics of the coffee market and the shifting expectations of today's consumers. One of the key challenges facing Starbucks is the perception among some consumers that the company's prices no longer align with the value they receive. While Starbucks has always positioned itself as a premium coffeehouse experience, the gap between its prices and those of its competitors, particularly in the fast food and quick-service restaurant sector, has widened considerably. This price gap is particularly noticeable for occasional Starbucks customers who may not be as invested in the brand's loyalty program or premium offerings. These customers are increasingly questioning whether the Starbucks experience, with its often crowded stores and long wait times, justifies the higher price tag. They are also more likely to be tempted by the value propositions offered by competitors like McDonald's, which have significantly upped their coffee game in recent years. The changing perception of value among consumers is part of a larger societal shift from aspirational consumption to value-conscious spending. In the past, Starbucks benefited from a culture that celebrated conspicuous consumption, where owning a Starbucks cup or being seen in a Starbucks store was a symbol of status and aspiration. However, the economic realities of recent years, coupled with a growing awareness of social and environmental issues, have led many consumers to prioritize value and authenticity over brand names and status symbols. This shift in consumer sentiment has created both challenges and opportunities for Starbucks. On the one hand, the company needs to address the perception that its prices are too high for the value offered. On the other hand, Starbucks has an opportunity to leverage its brand equity and commitment to ethical sourcing to appeal to this new generation of value-conscious consumers. Section 5. Brewing a better experience, Starbucks plan for improvement. Recognizing the need to adapt to these changing market dynamics, Starbucks has embarked on a multi-pronged strategy to improve its customer experience, enhance operational efficiency, and regain its value proposition. One of the key pillars of this strategy is a renewed focus on speed of service and convenience. Starbucks understands that today's time-pressed consumers are looking for a seamless and efficient experience, and the company is investing in technology and process improvements to reduce wait times and improve order accuracy. In addition to improving speed of service, Starbucks is also investing in initiatives to enhance the overall customer experience. This includes remodeling stores to create a more welcoming and comfortable atmosphere, expanding its food menu to offer more healthy and appealing options, and providing more personalized service through its mobile app and loyalty program. Section 6. The Digital Dilemma, addressing mobile app and order fulfillment issues. A key area of focus for Starbucks' improvement efforts is its mobile app. While the Starbucks app has been a pioneer in mobile ordering and payment, it has also been plagued by issues with order accuracy and fulfillment. Stories of customers receiving incorrect orders, experiencing long wait times for mobile orders, or finding their mobile orders misplaced are not uncommon. These issues, while seemingly minor, can have a significant impact on customer satisfaction and brand perception. Starbucks recognizes the importance of a seamless and reliable digital experience, and the company is investing in technology and training to improve order accuracy, reduce wait times for mobile orders, and ensure that mobile orders are ready for pickup as promised. Section 7. The Price Wars, Starbucks versus the Competition. Another challenge facing Starbucks is the increasingly competitive landscape of the coffee market. In recent years, Starbucks has faced competition from all sides, from established players like Dunkin' and McDonald's to new entrants like independent coffee shops and specialty roasters. This increased competition has put downward pressure on prices, making it more challenging for Starbucks to maintain its premium positioning. Starbucks' strategy for competing in this price-sensitive market is multifaceted. While the company is unlikely to engage in outright price wars with its competitors, it is focusing on offering a wider range of price points to appeal to a broader customer base. This includes expanding its menu with more affordable options, offering discounts and promotions through its loyalty program, and strategically bundling food and beverage items to create value perceptions. Section 8. Union Strong Navigating Labor Relations in a Changing Landscape. In recent years, Starbucks has also faced challenges related to labor relations. The company has seen a wave of unionization efforts at its stores across the United States, as baristas push for better pay, benefits, and working conditions. These unionization efforts have highlighted the challenges facing many service industry workers in a tight labor market, and they have put pressure on Starbucks to improve its employee relations. Starbucks has maintained that it is committed to providing its employees with competitive wages and benefits, and the company has pointed to its investments in employee training, development, and healthcare as evidence of its commitment to its workforce. However, the company has also faced criticism for its handling of unionization efforts, with some accusing Starbucks of engaging in anti-union tactics. Section 9. The Dragon in the Room. China's Impact on Starbucks' Future. No discussion of Starbucks' challenges would be complete without addressing the impact of China. China is Starbucks' second-largest market after the United States, and the company has ambitious plans to continue expanding its presence in the country. However, Starbucks operations in China have been significantly impacted by the COVID-19 pandemic and the Chinese government's strict lockdown measures. The lockdowns in China have resulted in temporary store closures, reduced customer traffic, and supply chain disruptions, all of which have impacted Starbucks' financial performance. While the company remains committed to the Chinese market, the ongoing uncertainty surrounding the pandemic and the Chinese government's policies poses a significant risk to Starbucks' growth prospects in the region. Section 10. Finding the Sweet Spot, Balancing Premium Appeal with Value-Driven Offerings. As Starbucks navigates these challenges, the company faces the delicate balancing act of maintaining its premium brand image, while also appealing to increasingly value-conscious consumers. Starbucks needs to find a way to justify its higher prices, without alienating its core customer base, who are drawn to the brand's quality, consistency, and experience. One way Starbucks can achieve this balance is by focusing on innovation and premiumization. By introducing new and innovative beverages, food items, and experiences, Starbucks can create a sense of excitement and exclusivity that justifies its higher price points. The company can also leverage its ethical sourcing and sustainability initiatives to appeal to consumers who are willing to pay a premium for products that align with their values. Section 11. The Path Forward. Can Starbucks reclaim its throne? The challenges facing Starbucks are significant, but the company's strong brand recognition, loyal customer base, and commitment to innovation give it a solid foundation for future growth. By focusing on improving the customer experience, enhancing operational efficiency, and adapting to the evolving preferences of today's consumers, Starbucks can regain its footing and continue to thrive in the competitive coffee market. The future of Starbucks, like that of any iconic brand, depends on its ability to adapt, innovate, and stay relevant to the needs and desires of its customers. As the company navigates the challenges of a changing market, its success will depend on its ability to find the sweet spot between its premium heritage and the value expectations of today's consumer.